A record-breaking ETF outflow has just shaken the crypto market, leaving investors wondering what's next. The current crypto bear market is driven by low investor confidence. Many people are selling their assets. This creates a cycle of falling prices. For example, one person sells, causing the price to drop. On a given Monday, a big seller can impact the market. This fear leads to even more selling, making the market very volatile. Predicting Bitcoin prices is very tough. Some experts think it could go down to $16,000. This is because big investors are very cautious now. For instance, a large company might sell its assets slowly. If this happens, the price will drop quickly, like a row of falling dominoes. Such a big drop would be very surprising, like a sudden storm on a sunny day. Looking at the past 15 years, a trend line emerges. Over time, patterns become clear. For instance, every 7 years, a big change occurs. This is like a reset button, changing the market's direction. It happens because investors reevaluate their assets, like a person rearranging their bookshelf. By analyzing these patterns, experts can make more informed predictions, like a meteorologist forecasting the weather. The crypto market crash is also driven by a lack of trust among investors. Many people are withdrawing their money slowly. For example, a small business might reduce its online transactions. This reduces the demand for cryptocurrencies, causing the price to fall. As a result, the market becomes less stable, like a table with uneven legs. Over time, this can lead to a big decline, similar to a landslide on a steep hill. Market trends clearly influence Bitcoin's value. Trends often start with a small group. For example, a few large investors buy or sell Bitcoin. This creates a ripple effect, like throwing a stone into a pond. As more investors follow, the trend becomes stronger, changing the market's direction. By studying these trends, experts can identify opportunities, like a surfer catching a wave. Some analysts warn of a potential crash to $38,000. This is because big investors often set price targets. For instance, a trader might aim to sell at a certain price. If many traders have the same target, it can create a rush to sell. This rush can cause the price to drop quickly, like a row of dominoes falling. As the price falls, it can trigger even more selling, making the drop even bigger. Shiba Inu's big crash shows how fast a cryptocurrency can lose value. One reason is that many investors buy in at the same time. For example, a group of friends might all decide to invest together. As the price rises, more people want to join in, but this can create a problem. If a lot of investors try to sell at once, the price can drop very quickly, like a crowd of people rushing to exit a room. This kind of situation can happen on any day, such as a Monday, when markets are often most active. Identifying key factors that contribute to market volatility is crucial. It involves analyzing trends and patterns. For example, a change in government policy can impact the market. A shift in investor sentiment can also cause big swings. Like a big storm, it can be unpredictable. Understanding these factors helps investors make informed decisions. Looking at past trends helps investors learn from mistakes. By studying market cycles, people can identify opportunities. For instance, a 6-month review of market data can reveal patterns. This process involves tracking market movements over time. It requires patience and attention to detail, like solving a puzzle. Understanding these patterns enables investors to make smarter choices. Using a data-driven approach helps investors set clear goals, like saving for retirement. It involves creating a personalized plan, tailored to individual needs. For example, a person can allocate a portion of their portfolio to crypto. Diversifying investments reduces risk, like spreading eggs across multiple baskets. By doing so, investors can minimize losses, even in a declining market. This strategy allows people to make progress towards their goals, one small step at a time. Stay informed and adapt to the changing market landscape.